Hello, and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer is here to educate and inspire you about the world of crypto and NFTs.
We'll do deep dives into critical concepts for understanding what's happening and discuss the current events shaping the space.
We're making this podcast for the curious, the free thinkers, and the change makers that propel us forward.
As we embark on our adventures, remember that none of this is financial advice and crypto can be risky.
In this episode, we wrap up some of the major themes of the summer in crypto. We're going to give you the bird's eye view of what's happening on the macro scale and share where things are heading as we close out this year.
End of summer. Let's wrap it up.
Let's wrap it up. We're headed into fall. It's been a crazy summer in the crypto world. When is it not a crazy season, actually, though, Cash?
Well, lately, man. We're seeing some moons right now. ETH price almost at 3,800. Solana's at you just checked it. What was it?
124 or something like that.
Wish I bought in more when it was at $40 a month ago.
you and everyone else that I know.
And also just price floors of NFTs, right? I mean, we're not only seeing the adoption of NFTs, but we're seeing a crazy, validation of their prices.
Yeah, the NFT mania continues in a strong exponential surge. Some of these NFTs have gone incredibly parabolic, and I think it's because right now there's no sign of it slowing down. So let's continue to the fun.
Yeah, I think degen apes are at a floor of around $7,000 or 60 SOL right now. So not too shabby for those Solana NFTs.
Yeah, exactly. Well, we're going to go over our summer wrap up view, and what we're going to go over in this episode is just the macro, perspective. We're going to touch on the exponential age. We're going to touch on asset price inflation. We're going to touch on NFTs like we already just did. We're going to touch on DAOs, and then we're going to kind of give you the predictions and kind of big picture outlook as we head out the rest of this year. So in the macro view, Cash, what's going on with things?
Well, I think it's important to talk about the recession that we just went through with COVID, right? And how we've been coming out of that. And really, the abundance of the money printing and monetary policy and government stimulus and what those effects are.
Yes, exactly. So we just went through the worst recession in recorded history, and it lasted only a couple months because the big hangover that people were predicting didn't really happen because we had all this economic stimulus and money printing, and all this free money has pretty much prevented us from having a long kind of depression.
So an argument there for the Fed's ability to print money, but also that is what's leading to asset price inflation versus consumer price inflation, right? And that's what we're going to kind of touch on, to really show that this printing of money hurts the average person.
Yeah, exactly. So the Fed has found a way to pretty much solve every problem that they come across by lowering interest rates and printing more money. So they're keeping interest rates low. So that means that banks can borrow money from the US government for really cheap. And then banks use that money to do things in finance and make more money with it. And then some of it, ideally is supposed to kind of trickle down to the average Joe. But that doesn't really always happen, right? Like what happens is that the money ends up getting inserted into asset prices, right? So we have asset price inflation. And that means, right, we a lot of us don't really realize that, right? We think of inflation, we just think of, that means like the price of things when I go to the grocery store, when I go to the gas pump, it's going to cost more. And that's consumer price inflation, just like your everyday goods that consumers like me and you buy to, do our lives. That's just one kind of inflation. There's another kind of inflation called asset price inflation. And that's the inflation of asset prices such as real estate, securities like stocks and bonds, and art, or even like cryptocurrency.
Right. And so if you compare different assets, you actually see a lot less inflation. So if you compare gold to US housing prices, they've remained fairly steady over the last few decades. If you compare housing prices to the US dollar, that's when you see them shoot up, or the US dollar compared to the price of gold.
Exactly. So your measuring stick really matters, right? Because we're increasing the price, we're increasing the supply of dollars at a really unprecedented rate. So the buying power of each dollar is less. Therefore, hard assets like real estate or bonds or stocks or art have skyrocketed in dollar value. But if you compare them to gold, or you compare them to other harder assets like uh, real estate or something like that, then it's there's been increases, but it's not nearly what it is looks like in dollar terms.
Right. So the argument for steady 2-3% inflation is good if you own a lot of assets, if you own real estate, if you own gold. But if you are trying to make your way into those markets and be a first home buyer, it's going to be a lot harder for you to raise that $1 million to buy your first home in California, because the assets have inflated so much. What do you feel that means for crypto?
Yeah, well, so as we see that people want to protect their wealth and protect themselves from the devaluation of the dollar, so people will smart money will move more of their assets from assets that are denominated in cash and move towards assets that are harder, such as precious metals, equities, real estate, and especially cryptocurrency. So we're going to see a huge rise in the value of all of these assets, which has kind of been the story of the past 10 years in the macro kind of view, as we've seen a lot of asset price inflation, and we're going to see kind of another 10 years of that happening. And that cryptocurrency is going to be a major hedge against this kind of monetary policy because of the parameters around the creation of more cryptocurrency, because of the issuance, right? You can't just print more crypto. It's digitally scarce. It's baked in the contracts, baked in the code. So it's like, here you have this big problem with how the economy is being managed in our government. And then you also have this almost perfect solution for that problem with cryptocurrency. So, when people really start to get this and wrap their head around it and see what's happening, we're just going to see the adoption curve just continue to be exponential.
Predict Raul Paul addicts over 1 billion users in crypto by 2024.
Yeah, exactly. Because I mean, what happens is, if you look at other economies that are kind of similar to ours, but maybe a few years in advance, like Europe or Japan, they have aging populations and they have a declining population too. Like their birth rate is slowing down. And we're kind of headed that way too, because we just had the baby boomers kind of peak retirement right now, and so they're headed towards retirement. So the buying demand is going to go down, right? When you go into retire, you start to save more, you buy less, you spend less because you don't have that much. You're not working anymore, so you're more you manage your money, a little bit more thrift like. So if you look at what's happened in Japan or in Europe, is they've kept interest rates low, but there's still not a lot of growth happening. Growth is just kind of slowed, and there's another thing called like stagflation, and that's kind of like where Japan's kind of been stuck. And Japan's the third largest economy in the world, so it matters, right? And we're just kind of seeing this play out, and that this long macroeconomic story that's happened since the end of World War I and World War II is fully playing out now. So, and we're kind of like going to run out of like track to run on, right? And so cryptocurrency is this perfect solution that gives us a whole nother system that we can work into and build into, and it's going to be better. It's just going to be better. So yeah, you're going to see the adoption skyrocket, like Raul Paul was mentioning, over 1 billion users in the next 3 years if we can stay on the same adoption curve, which is like 113% or something per year compared to the internet
growth.
Yeah, compared to the internet adoption, the growth of the internet, how many people were adding becoming more using the internet from 1997 to 2010, I think was like 63% or something like that, and the 60%, something like that. And then so crypto is right now almost double the pace of the adoption of the internet.
Well, and you remind me of what we're touching on in our episode 2, What is Money, of the unfettered GDP growth being the end all be all of a successful economy, and that continuation of wanting to expand the economy to keep our lack of gold reserves being found out, right? They keep the game moving forward, when really, maybe instead of printing all the extra money during COVID, what if we just cut our military budget a bit? There's a bunch of money. We don't have to always be printing money.
Yeah, there's a lot of different ways that we could adjust, our spending to accommodate for our situation. But at the current way that things are going, it looks like that crypto is going to be one of the best solutions that we have for our economic growth. And right now, like if you look at it, the total market cap for crypto is about 2 trillion, but the current equities market cap, so like all the stocks, if you add up all the bonds, all that kind of stuff, is about 200 trillion. So if you just extrapolate that, okay, crypto is only 2 trillion. The entire equities market is 200 trillion. So crypto could, get that big in the next 5 years or so. So we're looking at 100x, right? So, I mean, the opportunity is amazing. And this is because the reason it's exponential is because of Metcalfe's law. And that's what really makes this all make sense. Because you're like, wait, how can it really go 100x? That just doesn't seem right. But we're working with network effects, and Metcalfe's law defines network effects. And Metcalfe's law is just this idea that the more people on a given network, the more utility and value then that network has.
Right.
And also provides for its users. Yeah. And it provides for its users, right? Like if you have a phone and no one else has a phone, then it's pretty much useless, right? But if I have a phone and you have a phone, okay, it's pretty useful for me and you. But if you have a phone, I have a phone, and one of our other friends has a phone, then it's 3 times as useful, right? And then the more people you add that have phones, all of a sudden the value of having a phone becomes exponentially more valuable, and also because the utility of it increases, and not just for the one user, for every user, the value becomes exponential. This is Metcalfe's law. So this is this is what happened with social media. But the people who got to benefit from Metcalfe's law with social media were all the VC firms that invested early in Twitter and Facebook and Pinterest and in Google and all these VC firms, and all the executives and founders, right? They're the ones who benefit from those massive network effects and all became billionaires. But now the people who get to benefit from the network effects of cryptocurrency and blockchain are the users themselves. And so all the value that's being accrued and gained from crypto, because it's decentralized, is actually already in the network users' hands. And so we get that value.
I'm really glad
the users get it.
I'm glad you brought up the decentralization portion of that, because that is when the value gets spread evenly. But we've seen that there are some use cases where not all cryptos are as decentralized.
Yeah, exactly. Yeah, there's definitely a spectrum of what's centralized and decentralized, of different centralized and decentralized blockchains, right? Some sit like kind of right in the middle. Some are definitely completely decentralized, and some are more or less centralized. And when we talk about this is important, because if a blockchain is centralized, that means there's one point of failure or one point of attack or one point that a government can come and shut it down. So there's vulnerabilities there. There's vectors of risk that you have in a centralized blockchain that you don't have in a decentralized blockchain like Ethereum.
Right. And so much of that will depend on the technology used, the number of people acting as a node or a validator, and we're going to have an episode in the next week or two where we wanted to do a deeper dive into different blockchains, and what they offer and different securities, and kind of showing a big picture of the blockchain ecosystem. Because right now, a lot of people are just hearing about Bitcoin and Ethereum and maybe a little Solana, but there's a lot more out there that are going to be doing different things.
Yeah, exactly. Yeah, that's a great segue into talking about some of the layer ones and layer twos. So what is it? What is a layer one versus a layer two? Right. So we have different blockchains, and a layer one is the settlement layer of a specific network, a specific blockchain. So it's the building block, it's the foundation that sits at the bottom and keeps the ledger of all the transactions that's going on, and
Right.
it validates throughout the network of blockchain nodes, different people on the network, all confirming different transactions happening.
And
I like
I like the settlement layer.
Exactly.
So it's where the end all be all of the ledger and the transaction history lives.
Yeah. And then we have layer twos, which sit on top of a layer one. That's why they're called layer twos. And those interact with layer one, and layer one lends them its security benefits because it's a layer one. And then the layer twos are a little cheaper because what they do is they take all the transactions in a given amount of time and they pull them all together and make one big roll up of those transactions into a hash. And they just send that one hash through to the layer one. So it's kind of like carpooling, right? Instead of you're going one transaction by yourself, you go on a layer two, you get a bunch of people to do their transactions, roll them all up into one transaction hash, send that to Ethereum or whatever layer one you're on. And then that's just one way and then you split all the costs of that, just one transaction.
So you get a lot more throughput, you get a lot less price per transaction.
Yeah. So you have a scaling, it's a way to scale essentially to lower the price, speed it up, and make it more feasible for everyday users to get their transactions through and not pay an amazing amount of money. So sometimes the gas has been spiking recently on the Ethereum network because of all the NFT mania. So these layer twos are going to be a game changer.
Right. Yeah. There's been the discussion of keeping a few very high value transactions on layer one. If you're doing decentralized finance and moving around millions of dollars worth of Ethereum or whatever crypto, you want that security of layer one. But if you're minting an NFT and you're paying $100 or $50 to mint it, you don't want to pay $100 in gas. It just doesn't make sense.
Yeah, it's crazy because also NFTs are one of the most expensive things you can do on Ethereum because it's a very complex computation. And that's how these prices get worked out, right? Like if you're doing a very simple transaction, just like trading Ethereum for Bitcoin, right? That's simple. That doesn't cost a lot of gas because it's pretty basic. But if you're doing something like if you're bridging assets from one chain from Polygon per se to Ethereum, or you're minting an NFT, these are more complex transactions. And those are going to then therefore cost more gas. So that's also, it's like, not only are you maybe trying to get something done when you're aping into some NFT drop and like gas is spiking, but it's also, you're trying to do the most expensive transaction when you're minting NFT, which is with the ERC 721 token. So there's two kinds of tokens on Ethereum. We have ERC20 tokens, ERC 721. ERC20, those are fungible, right? You can interchange them. It's just like, that's what like Ethereum is. That's what like all these other tokens are. And then we have 721, which are one of one NFTs, non-fungible tokens. So any ERC 721 interaction on the Ethereum blockchain is inherently going to cost more just because those tokens are more complicated.
Right. And so bringing the NFT ecosystem into layer twos, there's this new protocol called immutables. And Immutable X is Ethereum's first ZK rollup protocol for minting and trading NFTs. So it's essentially using this layer two technology to drastically reduce the price of NFTs and one thing that this is really bullish on, maybe not just for the trading of a JPEG NFT, but when you start getting into the gaming side of NFTs or the audio side of NFTs, where you're actually doing, a lot more transactions, you're going to want this layer 2 throughput.
Yeah, there's going to be different blockchains for pretty much, I think, all these different kinds of gaming ecosystems that pop up. Like Axie Infinity has their own chain called Ronin, and this was another chain, Immutable X. And we're going to see more of this trend continue because, just like you said, it just doesn't make economic sense when you have hundreds of thousands of transactions per second in these games happening, and you can't pay all those gas fees and wait all that time, or else the game one would just be really not that fun and take really long to play, and no one would want to play it. So,
yeah,
so
and
these go ahead. Sorry.
You're reminding me of the Bankless episode on the different electronic markets. And this day and age, we think of the internet as the internet. It's the internet. But there's actually a lot of different web protocol coding languages that interact with the internet, right? So you got HTTP, hypertext transfer protocol, but then you got STP, you got POP, you got SMTP for mail. So there's all these different language codes that you could essentially look at in the crypto blockchain as different blockchains. There's different code blockchains that are going to all kind of contribute differently to the blockchain ecosystem.
Yeah, and you can almost look at them as like Legos, right? And they stack on to each other, and they have interoperability with one another. There's composability, so that's kind of how the first internet's kind of built, right? We have IP, we have TCP, all these different protocols. So Ethereum's very similar in its structure, and that we have layer 1 base layer Ethereum, then we have layer 2, we have these other protocols that will sit on top of it. But we also have this protocol layer itself, right? Where we have where all of DeFi sits right now. We have the asset layer where we have the different tokens. And then we have the app layer, right? Which is like the layer that you and I and most people kind of interact with, is when you go to a Web3 website, which it's really more of an app is how they actually function. You go to a Web3 website like OpenSea or Uniswap or Aave or Synthetics, any of these DeFi sites or any of these marketplaces, right? You just connect your wallet. That's a Web3 site. You connect your wallet. That's an app. That's the app layer that sits at the very top. That's the customer facing, user facing layer, right? That's the very top. So you're right. And that's just like when me and you go around on the internet, most of us go on the internet, right? We're not like, oh, like I'm using TCP right now, or I'm using SMTP, or I'm using HTTP. Like you just click around on your website, right?
Yeah.
And you just do stuff.
So
that's where it's going to go.
Yeah. So I use SMTP. But
yeah. So that's where it's going to go, where it's like, you're just going to do stuff with your crypto wallet on different sites and different web apps. And you're not even going to know or really care what blockchain it goes through, because it's all just going to be automatically routed to like the cheapest, fastest way for all of these things.
Right.
And then depending, what's really going to, like you mentioned, is kind of change people's minds about maybe what blockchain they want to use, is if you're moving a significant amount of assets from, around, then you might really want that guaranteed security of one of the more foundational layer blockchains like Ethereum, which is, fully decentralized.
Yeah, and I really like the piece of history on the internet of in the 90s or even the 80s, there's over 100 different protocol languages. And now, we kind of landed around 5 or 10 that we all use today. We kind of take them for granted. And at the time it wasn't even thought of, what we would end up at. And that's kind of where we're seeing over the next few years what is going to stick and what's going to kind of be swallowed up by other blockchains.
Yeah. And it's going to be kind of that thing where 80% of the market share is dominated by a few giants. And then there's a long tail of smaller ones all the way out to the fringe ones. But this is kind of how these things go in history, is that there's a bunch in the beginning, and then it gets whittled out, and a few end up becoming the dominant
And
protocols or their dominant apps or whatever it is.
and I like that it makes us realize that they don't need to be competing with each other. Ethereum and Solana are actually really good together. They don't need to be trying to outcompete the other. They can be doing other things. And I was really excited to see that the Bankless boys put out a Solana episode, because we've been talking about Solana for almost a month now, and to see that they're finally giving it a full episode on Bankless is speaking volumes of what the blockchain's doing right now.
Yeah, there's room for lots of blockchains in the world. There's going to be so many. I mean, it's already hard to keep track of how many there are right now, and it's only going to get harder because there's going to be more specialized ones for different functions and different communities, and depending on different levels of centralization versus decentralization, all these things are going to play into it. And just like you said, like there's blockchains now that's being specified just for NFTs. So speaking of NFT mania, we have now blockchains that are just actually being built out to facilitate the exchange of NFTs. So that's even another big step in this massive NFT wave, which is another big theme of this summer that we wanted to touch on.
Right, dude. That's exactly where I was hoping you'd go.
Yeah, we have OpenSea continue to lead the pack of the marketplaces. It's just mind blowing what OpenSea is doing. So those of you that aren't sure what OpenSea is, OpenSea.io is the site. You can check it out right now if you want. It is an NFT marketplace. So you can buy, sell, trade, auction off your NFTs. They have everything under the sun there. It's pretty cool to just browse around and see what's going on if you haven't.
Yeah, and I think where we can really see the volume is if you go to look at the burn rate of Ethereum since EIP 1559 has come online just over a month or so. OpenSea leads the pack at 27,500 ETH burned since EIP 1559.
What is that in dollar terms, Cash?
Oof, yeah, that is 27,000 times 3,700. So I'll let you do the math. That's a lot of money right there. And just the next contender is down at 10,000 ETH, and that's Uniswap. That's DeFi summer. That's the decentralized finance that we thought we were going to be talking about, but it really turned out to be NFT mania instead.
So I just did the math. That's over $100 million worth of ETH burned already in EIP 1559. It's been less than a month, and OpenSea has burned over $100 million worth of Ethereum because of how much transactions are happening on OpenSea. So these are just some ways to just we're just showing you some of these statistics because they're just mind blowing to really demonstrate what's happening with NFTs and what's happening on OpenSea. Another crazy stat is that, for example, Etsy, it had a total gross sales value for the second quarter of 2021 of 3 billion, and NFTs on OpenSea just in the trading volume in August was over $3 billion. So OpenSea did in 1 month what Etsy did in 3 months, and Etsy's been around for so long. It's just mind blowing to when you see these stats stack up next to each other.
Right. And the comparison to what eBay's doing too. It's just once there's actually the traffic to OpenSea, like there is on these marketplaces like Etsy and eBay, it's just going to be unthinkable what the volume is.
Yeah, exactly. And OpenSea is not the only one that's doing cool things. Super Rare Marketplace launched a token to become a DAO to all the collectors that have bought NFTs on their marketplace, as well as to all the artists. And it's just a really cool way to see how these dominant marketplaces are starting to shift how the wealth is shared, right, among the people that use it, right? So they're actually rewarding people who have used it and giving them the tokens of their DAO. And this token just happened last week. Yeah, and the token's already appreciated a little bit. So it's cool to see how these marketplaces are not only dominating in dollar terms, but they're dominating in cultural terms in how they are shifting the way that these businesses are run and how they distribute wealth.
Well, and I like the distribution of wealth that you're talking about to the token holders. So actually the community, the people who are supporting and part of it, not the founders or the centralized few who are making a lot of money, but it's actually allowing for the democratization of the profit, right? So the NFT that I wanted to talk about is the royal.io, which is a music NFT, where it's founded by the EDM artist Justin Blau, and he actually sold the first ever tokenized music album, which grossed close to $12 million in under 24 hours. And it briefly held the record for the most expensive single NFT ever sold. So what his idea is not only giving tokens or cryptocurrency opportunities to the artists, but the fans that support them, the early adopters of the music, the people who help get this artist off the ground, like the street teams from old festival days, right? People who are really saying, hey, I love this artist, you've got to listen to him. And then giving those supporters some incentives and, a little bit of benefit for being an early adopter.
Yeah, and this is exactly what I mean when I say the tokenization of culture and culture as an investment. And this is just one way that this is going to happen, right? So if you are a tastemaker, if you know that about this artist, right, and you're one of the early adopters of his music and you share his music and you know about him, and so you're able now not to just take your taste in knowing about this artist and knowing about their music and actually benefit financially because you were in the know about this certain particular part of music culture, and then you get a way to actually monetize that through the tokens that you get from being a part of these early phases of these projects.
Yeah, I'm excited to talk to our friends, the Peach Kings, LA based musician group, and they are excited about the NFT side. So we're going to use them as a little bit of a case study in one of our Nifty episodes to see what it means as an artist to think about having your album on an NFT.
Yeah, and this is exactly where the music industry is going. It's all going to be NFTs, and whole different business models are going to crop up for all these creators, and it's really exciting. It's a fantastic way to support artists that you care about and artists that you love, and I'm really stoked for them because it's there. A lot of them are realizing much more of the financial rewards for their art and their craft than they would otherwise in the traditional models.
Let's go slightly away from the decentralization. What can you tell me about the Facebook announcement on NFTs?
So Facebook is going to be launching a virtual world, metaverse world, and they're going to be launching a DM token. And so they're going to be launching a whole kind of their own cryptocurrency, and they're going to be using that in their virtual world that they're launching. So they're diving in. And this is another narrative here that with the NFTs and just how big this NFT mania is that big money is coming in, and they're coming in. They're going to come in with really massive projects, just like Facebook's doing. And I'm excited to see how it all plays out. I think it's just going to be fun to watch at this point.
Yep. Yeah, I'm excited. We'll keep update on that. It's interesting to see if they do a USDC sort of integration or they make it completely on their own. But again, I like that they're adopting, but I don't necessarily want to give more money to Mr. Zuckerberg.
Yeah, it all touches on this. It all touches on this centralization versus decentralization conversation that we were having, because Facebook is a centralized company. So if they can issue tokens and do all this stuff, but then they can also just change their mind about what those tokens are worth or how you use them, right? It's almost just like airline miles, right? Like airline miles look kind of cool, but it's also like, wait, they control all the rules. I mean, you ever read all the regulations and red tape and fine print with airline miles? So it's the same kind of thing where like airline miles are kind of like an early cryptocurrency model, right? Because it's like a currency for airlines. Right. So, but it's all controlled by this company. And then you're going to have Facebook also kind of doing something like that. And I'm sure Apple is going to do one, Google will have a token. And what some of my friends and I were discussing actually is like, okay, well, if you have the Facebook tokens and if you want to like go to use Google stuff, like you won't be able to use the Facebook tokens on Google. And then you won't be able to use like Google tokens on Facebook. Like they make these walled gardens, right? And Apple will do the same
Right,
thing. Like
right. Why can't I use my Delta airline miles on United?
there's centralized walled gardens where it's okay, you can only use this certain asset in their world. And then if you want to go to a different world, you're just kind of, well, you have to start over. So this is I think this is a model that we'll see, but I think that unless they find ways to really innovate in this space, I think that the decentralized versions are going to be really attractive for a lot of other reasons. And we don't even know all those reasons yet, but we're starting to see some of them. And I think that's just going to continue to attract people. And also, to be honest, like, do you really want to like spend time in another 10 years doing stuff on Facebook or on Google? Like, it's just kind of
Not
like, really,
really.
like we're just gonna all hang out on Facebook even again for another decade. Like that doesn't sound exciting. I mean, it doesn't sound like the future.
Right. We need Facebook to get us where we are today, but you're you're bringing us right to the point of telling our listeners what's a DAO? What is a decentralized
Yeah, this is why
autonomous?
decentralized organizations are so important, or DAOs,
Yes.
decentralized autonomous organizations. Yeah, so that's a new kind of way that people can structure a company or a business or an organization of any kind. Really, it can be about anything. It can be how something that you do for work. It could be a hobby. It's changing how we collaborate and create.
Yeah. So a lot of the governance for DAOs are based on token holding or how the smart contract for the organization is structured, which gives specific guidelines for how and when things can happen instead of a board of directors having their opinions sway it.
Yeah, exactly. So there's baked into when you create a DAO, there's a set of rules that are baked into the contracts, and so it's this merging of humans and code in this kind of soup, and the code regulates how things get done, and no one can change that code unless there's a whole structure of how that code would be changed through voting and things like that. But what makes it autonomous is that it only needs to reference itself to overcome conflict or make changes or to make decisions, right? Like some other organizations, right? You might have to, if it is a conflict in the business or something, you might have to go to court, right? But in a DAO, all the mechanisms for settling anything that could come up are self-contained within the organization. So it doesn't need to reference any other system or of law or any other system of business to function, which is really unique, right? Because then it means it's borderless, right? It's location agnostic, right? It doesn't really matter where you live. If you're part of a DAO, you can be part of the DAO in any country. And also because of it's borderless and it's location agnostic and autonomous, it also exists kind of like outside these like regular business rules of like, oh, well, if you're a C corporation, you have to do this, or if you're a LLC, you must do this. Like there's no like regulatory framework that's gonna like, that's red taping them in, right? They're kind of more natural and organic, flowing this way and super fluid.
It seems like in the ecosphere, we've seen DAOs tend to be a little bit more centralized in the beginning and then becoming more centralized over time, or LLCs decentralizing and turning into DAOs.
Yeah, so that's what's kind of cool is that you can change from a centralized business model into a DAO, and we've seen a few companies do this over time. And it's kind of like, because it's like when you're starting something out, often you kind of need like some strong leadership to get a project off the ground, and to you need a faster way to make decisions than having to go to a vote every time you want to make a decision. But then once something is kind of established and functioning, maybe it's better to kind of let the ecosystem and the community that's using it and getting benefit from it give them the control of it. And that's we've seen that transition happen in a few places in the crypto world, and It's really cool. It's a great way to kind of take a step back and still benefit from being involved in the community that you built, but no longer having to have that pressure that it's like up to you to keep it going.
Yeah, and I like the idea of DAOs for more than just like traditional, like we've seen them for maybe financial reasons, but we've also been seeing them pop up for NFT communities. So there'll be an NFT community where they have a token where their DAO is distributing that token for community benefit. We've seen some philanthropic NFT DAOs where 15% of the wallet funds are directed towards nonprofit usage or donations, and the DAO, the members of the tokens, they get to literally vote. You have one token of a stoner cat, you get to vote on what they do with X, Y, and Z. And that's what we've seen, kind of that more of that social club DAO.
Yeah, so a lot of DAOs are these fun social clubs around certain NFT collections or certain subcultures in the crypto space. But I think we're going to see a proliferation of DAOs pop up around every kind of hobby, every kind of interest. It's going to be just the new way that people organize. And what's fascinating is that, they're going to be united around NFTs, is how you're going to display your participation and your like badge that you're in a certain DAO. Right. So it's like, like you used to have pins that kind of, that was a thing, in festivals, people collect those or whatever, or, whatever ribbons for if you're like an athlete or trophies. So now we're going to have like DAOs, and you're going to just have cool NFTs for certain DAOs. And it's going to be the way that you show the world that you're in certain DAOs is by rocking different NFTs, and you can collect different NFTs for different events that DAO has, right? If you go to like the certain like in real life event of a certain DAO project, you'll get an NFT in your wallet that said, "Oh, I was at the Labor Day weekend cookout for the Stoner Cat DAO," or whatever it is, and you get that cool NFT. So it's going to be really fun, and people are going to. It's just one of those things where it's people get NFTs, people get the social aspect. You don't have to explain it to people, right? You kind of have to. You kind of have to like maybe explain to people like what crypto is, why they should buy Bitcoin, why they should buy Ethereum. But it's almost just like, oh, cool, that's a cool picture that I can put as my profile pic, and also gives me part of this cool club on Discord and all these other people that are really into NFTs and art as well, and I like to socialize with them, and they actually have fun events that they're doing, and they're creating a whole community. All right, yeah, I'll spend money on that.
And also the ability to keep it unique, to know that the artist who put time into making that gets rewarded, and that we're all appreciating that art. We're always going to have people in our communities that are trying to copy and kind of get rich quick, but when you actually can reward an artist for their work every time something's sold, it adds a lot of value to that actual piece of art too, because it incentivizes people to continue that lifestyle.
Exactly. Yeah, and we love to support artists, and that's another benefit of DAOs. As these DAOs get adopted, there's more ways for just people in general to create and connect to the ecosystem and to contribute. And that's what's great about having something that's open source, and you can commit to a DAO as much or as little as you want. You can come and go. You can, they can have certain projects that need to get done, and you can just commit to a certain project. You can even be an anonymous worker for the DAO, and you can just use your profile pic of your cat or your ape or your penguin or whatever it is, and just have that be like your avatar that gets the work done, and you get
Right.
paid in crypto. So that's another cool thing about DAOs. So there's this cool blending of NFTs and DAOs and culture, and I think we're just seeing the very beginning of it, and I'm excited to see where it goes, especially as we start to combine more and more of real life events plus NFTs plus DAOs. I think it's going to get really, really fun, and it's going to become even more vibrant. And it just kind of reminds me almost of when they had all the salons in Paris, and everyone was just kind of getting together and just talking about these new ideas that were happening in art and culture and science and technology. And I feel like, when I go to Bright Moments and I have conversations with people, people are just really open-minded and ready for something new and wanting to discuss the possibilities that this technology and these communities are creating. And it just feels really refreshing, and that something new really is happening. It's poignant and it's palpable that their culture is changing in profound ways, and we're just kind of just starting to even creep into what it means. And it's really hard to unpack, even because it's just so hard to wrap our heads around the fact that our monetary system, our cultural systems, all these things are starting to change right under our eyes.
Yeah, so let's maybe wrap it up with some predictions, some outlooks. What do you see over the next 6 months? It sounds like, one of the big things we hit on was decentralization, NFTs of social media, right? So we see Facebook coming into the scene. We maybe see a platform like Instagram where you post a picture, it's an NFT.
Yeah,
Gaming,
so we have
right?
Aave.
Gaming.
Aave is making a social media platform, and Aave is a DeFi protocol, a borrowing lending protocol on Ethereum, as well as Polygon. But they're also aping into the social media world, so that's a really cool thing. So yeah, this whole overlap of NFTs plus social media, fascinating possibilities, and we're going to see more and more of that over the next 6 months to a year, and it's definitely going to be a disruption for a lot of these apps. I think that when these decentralized social media things, when they do finally get network effects and people start switching over to the whatever the next thing is, it's gonna be massive. It's really gonna be massive. So I'm excited for that.
And especially, with the layer two. So what we're just talking about with scaling, roll-ups, other blockchains that have more throughput, then we'll really start to see the gaming side, the higher transactions per second that are needed for these other NFTs to really take hold. So kind of that synergy between the layer twos really becoming more prevalent and the explosion in that world is what I'm going to be kind of looking for as a pulse.
Yeah, so overall, we're just going to see more adoption happening as layer twos come on. So that means it's cheaper to do stuff, it's faster, and so we're just going to scale faster. The user experiences are going to get smoother. There's a bunch of new wallets coming out, so the whole user experience is going to just get easier. There's going to be a lot less friction, and so that's going to help the onboarding of a lot of new users. And then we have the merge coming up. So the merge is when ETH shifts from proof of work to proof of stake. So it's kind of how the network validates itself. So this is a big update to the network. They call it ETH 2.0. It's going to be happening in the beginning of 2022 is kind of the ballpark. They're not exactly sure exactly what day, but this is going to make it so that ETH shifts completely deflationary, meaning there's less issuance. There's actually negative ETH. ETH is being burned more than it's being created. So it's going to result in ETH being more scarce. That tugs into the ultrasound money narrative with Justin Drake, and that literally there's going to be less and less ETH being created, but then we need ETH to do all these transactions on the Ethereum network, and then more people are going to be using the Ethereum network. So, if you just look at these forces, these market forces are going to make the price of Ethereum go up because demand is going to keep increasing while supply keeps decreasing. So that means the value will rise. So we're going to see ETH appreciate significantly, I think, towards the end of this year. I'm predicting at least $10,000. I'm predicting at least $10,000 per Ethereum by December.
Yeah, I was thinking end of year 10K.
Yeah, and Bitcoin will continue to rise. Bitcoin could be up to over 100K by the end of this year.
I'll say $1,000 per Solana by the end of the year.
1,000 Solana, bullish, yeah, I could definitely see. I could see Solana hit that. Yeah, Solana's kind of where Ethereum was like a year ago. So
right, it was only founded in 2018.
Yeah, exactly. And they actually just announced they have another hackathon on Solana that just started yesterday called Ignition, and they have over $5 million in prizes and rewards for people who build apps on Solana. So a hackathon is a way for them to like get all the developers buzzed up and excited to essentially build code up apps really quickly that would work on Solana and find different things to build that they need. And if you create something valuable that the core team of Solana thinks is really valuable, then they give you money. So that's a hackathon. So they have one going on right now. It's a way to kind of bootstrap development, right? Just like on different blockchains, they might have liquidity mining, right? They give out tokens for you using a different blockchain that's new. So on a new blockchain, to get developers to build stuff, they have hackathons. So,
Right. Gotcha. And
so
then
so
they
yeah, so
reward them in
Solana's
that.
getting more traction, more adoption, more apps, and the more, it's network effects, right? It's Metcalfe's law. So if you just look at the network effects and how many people are using it and where it's going, how many people are adopting it, and it always starts with developers. Because
Right.
if there's
And
no
then
apps, then there's nothing for users to do. So if you want to see where the industry is moving, follow the developers. If you follow developers, you can see where the zeitgeist is headed, and they're
right.
all on Solana right now.
And that's the social side of things, right? Where it's moving to sports teams and celebrities and big businesses actually having a presence in these spaces. So I'm excited to see what that looks like in the, around the holidays. What NFTs can you buy for your loved ones? It's going to be there. You're going to hear advertisements for big old red bow on this NFT for your loved one.
Yeah. I mean, it's just going to be too easy for some of these companies just to resist. And I mean, think about it. It's great because you don't have to ship it, right? That's always the thing in the holidays, is like always like, oh man, like shipping and all these, Amazon is always telling you like, oh, the last day to order something, if you want it to arrive by a certain day, by Christmas or whatever, you have to order it by this day. And with NFTs, like you literally could buy it Christmas morning and then just like send it to your friends or your loved ones, and then you're like, okay, see, it's right there, right? It's the fact that it's digital goods, it's brilliant because you don't have to keep inventory in physical space, you don't have to ship it. So yeah, I mean, the NFT is the perfect gift for 2021. I mean, what would be a better gift for someone who's into crypto in 2021, which is the year of NFTs, right? I think we're all going to remember this year as the year that NFTs really exploded in the world. And when we look back, because in the beginning of this year, did you really like the average person had never heard of them? And even in crypto, they weren't that dominant. They were just like this side thing that just was like, okay, that's cool. But now they're center stage and they're impossible to resist and impossible to ignore.
Yeah, you were really sweet, and you gave me an NFT on Monday. I woke up in the morning and had a new NFT in my OpenSea.
Yeah, gifting NFTs is the new thing, people. So if you have some friends and you want to make their day, just get their wallet address, send them an NFT. It doesn't have to be like the most expensive NFT you own. Just send them something, something cool. It's a great feeling sending someone an NFT.
Yeah, I love it. It was the most exciting thing that happened to me yet, is to be gifted once a year. So sweet.
What are you excited for, Cash?
I was just going to ask you. Well, I'm really excited. Can you guess? It's another NFT. This is on the Solana network called Rogue Sharks. And we talked about them on one of our Getting Nifties, but they just announced that they'll be minting at the end of September for 5 SOL. So by that time, it might be $1,000 when SOL's up around $200 a share in the next month. We'll see. But what I really love about them is they are trying to highlight the shark fin hunting practice for making shark fin soup, where they really hurt a lot of the sharks in our water. So a cool way.
They kill the whole shark just to get its fin, right?
Or they chop the fin off and they leave the shark,
but doesn't
in the water to die.
Yeah,
exactly.
Yeah, so it's like
terrible.
It's just like killing like an elephant just for their tusks, right? They kill the entire elephant, just cut the tusks off. It's horrible.
Yeah. So that's the eco space I'm excited about, is, how can we allow this NFT mania to also do good in the world? And one of our next guests this month is one of our first guests, because we're going to start bringing guests on, is the Regen Network. So a blockchain for social, responsible land practices is just one example blockchains doing more than just making people money right now. They really are trying to solve problems that face us in the world.
That's
What are you
awesome.
excited for?
I am excited for Ethereum just in general. I'm excited for all the amazing things that are happening. It just feels like there's so much momentum in the space right now, so much positive momentum. And in general, I'm just excited for the bright light that crypto is in the world, because I think if you look around in the world and if you look at the news, you can get really bummed out and you can be like, wow, we're never going to get ourselves out of these problems. But then you look at blockchain technology, you look at crypto, you look at NFTs, and you see all this positivity. You see all these people that are incredibly smart, much smarter than I'll ever be, working on these amazing solutions for technology to coordinate human beings. Because a lot of these problems are problems of coordination, right? Like if we could all coordinate ways to make incentives that align with some of these problems, then we can solve them. So we just have to figure out, how to apply some of this technology to create really creative ways, just like how like you were just mentioning with Solana Rogue Sharks, and how, they're figuring out a way to use this NFT momentum to stop a really bad practice that's happening to sharks. So the more and more people find these innovative ways to combine blockchain and real world positive change solutions, the better we're all going to be. So I'm just excited for the sweetness that crypto represents, and the positivity that can happen when we work together in a revolutionary new kind of way.
I never said it better myself. I like all my NFTs wrapped around ETH too.
Yeah, exactly. It's good to wrap your ETH with NFTs. And that's what I tell people that are new to NFTs. It's remember that, when you buy an NFT, well, most of them, right, they're denominated in Ethereum. So it's just another way to hold Ethereum as well. So if you're bullish Ethereum, might as well hold a cool piece of art that represents Ethereum.
Exactly.
Well, that's it for now. We hope you enjoyed this episode.
Thanks for exploring the world of blockchain with us.
Crypto is changing the world, and we're here to ensure that you're ready.
Please subscribe, share this podcast with your friends and enemies, and leave us a review.
We look forward to sharing our next episode with you.
Cheers.
Cheers.